you're just a number, you need a good one. Because, in the mortgage business, I'm sorry to say, when it comes to credit scores, you are a number. That credit score number is vitally important in a variety of ways when you're getting a mortgage. And I, of course, last week went over how a lower credit score can affect your interest rate. And that discussion last week was primarily or focused on conforming conventional loans. And one of the things I pointed out, just as a reminder, agency and the PMI pricing, that's private mortgage insurance pricing for lower credit scores and higher LTVs is at a cross purposes. And it can trap a borrower into the worst portion of the FICO LTV grid. Now, FICO, of course, we all know what that is. That's the credit score company that basically developed credit scores. And then LTV is loan to value grid. And of course, when I completed the comments about conforming conventional pricing and how credit scores affect the pricing that you can get on that mortgage, I pointed out that there is an alternative program that I think is a great alternative for those lower credit score borrowers who are looking to get a mortgage with a minimal or small down payment. And I pointed out that this alternative program is kinder and gentler for those borrowers with lower credit scores and high loan to values. And that program is FHA. And there's a couple of reasons for that. For one is FHA has a FICO LLPA grid. Now, if you remember from last week, LLPA, that's loan level price adjustment. So with an FHA loan, there is a grid that establishes how the pricing for that loan is affected by your FICO score. And there is different loan level price adjustments or price adds depending on your score. The lower your score, the higher the LLPA. Now, you can think of LLPA kind of basically the same as points. But again, the thing to note is FHA does not have a loan to value LLPA grid. In other words, FHA doesn't adjust your pricing or the rate you can get based on a minimum down payment or a higher down payment. There's no change to the pricing, whether you're putting 3.5% down the minimum or whether you're putting 20% down. That's not the way it works with a conventional conforming loan. In an agency, that's conventional conforming LLPA grid. The other thing you can see is the maximum spread from low to high for the LLPA price adjustment. It can be as high as 2.5 points, which that is substantial. Now, with an FHA LLPA grid, the maximum spread from low to high is only about 1.75 points for scores all the way down to 600 or higher. So let me show you this. On the next screen, and what I'm going to pull up here is the agency FICO and loan to value grid for purchase loans. Again, this is for conventional conforming Fannie Mae, Freddie Mac loans. And what you can see there is in the yellow portion between a 75.01 loan to value up to a 90% loan to value. So that's basically less than 20% down up to 10% down in that yellow portion. That's where you can see the highest LLPAs that can be charged. For example, if you look at the bottom for credit scores under 639, and let's say you're putting 15% down, that middle column of the three yellow columns. If you're under 639 and you're putting 15% down, there's going to be a 2.875%. That's 2 7/8 points hit to the pricing on that loan that you're trying to get on your rate because of that lower credit score and that down payment amount. Now, what happens in reality is borrowers don't pay those price adjustments as points. That's too much cash, and most borrowers are challenged with cash. So the way these pricing adjustments are handled in terms of the higher adjustments as you get into lower down payments and lower credit score is that we adjust the rate to absorb this LLPA. So for example, again, 15% down if you're under a 639 score, where you're going to be hit with a 2 7/8 points essentially hit for your lower credit score and down payment amount. What we do is you absorb that through a higher rate so you don't have to pay it in cash. And one of the things I was pointing out last week is interesting to note on this grid, if you put less than 10% down, if you go up to 5% down, you actually see lower LLPA adjustment For example, under 639, it drops from 2 7/8 down to 2 1/4. So Fannie and Freddie actually give you better pricing if you put less than 10% down when you have a lower credit score. But as I pointed out last week, that ends up getting offset by the PMI company charge, because the PMI companies aren't doing that. They're not giving a break to the PMI premium for a borrower with less than 10% down. They actually hit you harder, and that basically undermines the slight improvement in rate that Fannie and Freddie are giving you for a lower credit score and a less than 10% down payment. So as a consequence, you end up kind of getting stuck in that portion of the grid that's in the yellow. Now compare this to the FHA grid, which is what we're going to pull up next. With the FHA grid, it's much simpler. You can see this. There's a lot less LLPAs, again, loan level price adjustments. And in particular, you can see the spread there. Look at the 600 to 619 line item. You see minus 1.5 is what you will get charged, or what's going to be assessed on your loan, on your rate, 1.5 points essentially of your loan amount. Whereas if you're 740 or higher, you actually get a benefit, you get an enhancement to your pricing of 1/4 point. So what that really means is between a 740 score and a 600 score, the spread from low to high is about 1 3/4 points. That's, again, I call it kinder and gentler to the borrower than a conventional loan with similar type of scores. Again, those lower scores at 600, you're going to get hit 1.5 points for your loan level price adjustment due to FICO. Remember, on that other agency grid, you would get hit at 2 7/8 points, and that's at 620, where that is the minimum with conforming conventional, whereas FHA, of course, we can go down to 580 with a 3.5% down payment. So the point of this is FHA, when you're dealing with lower credit score and with lower down payments, and actually even not necessarily the lowest down payment, even if you go, 5, 10, 15, 20% down on an FHA loan, if you're in that lower credit score level, 600, 620, FHA is going to be a better deal for you in a lot of cases by far. So that's what I want to show you next.